And we are going to delve into earnings season in just a moment. But first, some breaking news. The TSX down more than 1,000 points today, as you just saw. And we're joined now by Zachary Hill. He's head of portfolio management at Horizon Investments. It's good to have you join us. Thanks so much for your time.
Absolutely. Great to be with you today, Lindsay.
Now, I know you're mostly focused on the U.S., but I just wanted to ask you, because this is our breaking news, watching the TSX down by more than 1,000 points for the first time in quite some time. And I'm just wondering what you make of this. Like, this is mostly, I'm assuming, the price of gold and silver down quite a bit today, bringing down a lot of gold stocks on the TSX.
Yeah, that's how I would characterize it. I mean, you mentioned the tariff tension with the U.S., and that's something that's certainly, simmering in the background, doesn't appear to be going away. But really, the story today is the outsized moves down we've seen in precious metals, gold and silver, just really falling very, very sharply. They've been a key part of focus for the market and have attracted a lot of speculative capital more recently. And so these are the types of moves I think that you can expect, when that sort of thing happens. And that's driving, metals and mining and related stocks down, which is certainly weighing on more commodity-geared markets like Canada's.
Okay, yeah, so we're going to keep an eye on the TSX today and see what happens later this afternoon. But in the meantime, like you mentioned, that trade tension, and that's all fueling a lot of uncertainty. And I noticed in your notes here, you say investors are slowly coming around to the idea of uncertainty. Can you kind of unpack what you meant by that?
Yeah, I mean, we've been in kind of an arc on this topic. I mean, a year ago when we were doing the whole tariff liberation day thing, a lot of, trade uncertainty, and they were big spike, kind of things that faded quite quickly as, deals were worked out and tensions were relaxed. But I think as we sit here today, what we're realizing is while the headlines might not be quite as scary, there still is quite a lot of reshuffling that's going on in global capital markets. We've seen some comments around de-dollarization and things like that. And I think that's not something that's an acute risk to the exchange value of the dollar, but it is something that over time, countries are going to have to deal with in terms of the way that they think about trading relationships, the way they think about, direct investment, and the way that they think about, what their portfolio flows look like, which, in a world that has seen very large trade deficits out of the U.S. for the last 25 years, there are serious pools of, capital in other countries like Canada that hold, quite a lot of U.S. assets. And we do think on the margin, some of that behavior is going to change around, especially exposure to the U.S. dollar.
But you say, though, that this doesn't mean we're going to see like a sell America approach, which is interesting because I've found ever since the new year, a lot of, economists are pointing towards overseas markets, like different markets that are not North American, something else to invest in 2026. Do you see it that way, or do you think people will still continue to invest in American stocks, too?
Yeah, we think about it. It's a nuanced point, but let me see if I can unpack it. Within the U.S., there are the most innovative technology companies anywhere in the globe. We don't think anything that's going on right now, geopolitically or politically, is going to change that. And so we do think people are going to continue to want exposure, especially to the top of the U.S. market, to the technology firms that are driving, the next wave of innovation, which we think is here to stay in AI. But at the same time, there are a lot of other stocks that are available in other indices. A lot of countries have financials, for example. A lot of countries have oil companies, transportation, staples, those types of things. And so, on the margin, we do think that kind of calculus shifts a little bit. And, it's not something that's going to be a whole big kind of cataclysmic event. It's more of just like a, portfolio changes around the edges. Couple that with, what we expect to be a weaker dollar as we see the Fed cutting, once, maybe twice after we get a new Fed chair in. And the rest of the world is either, on hold or hiking interest rates in the case of Australia, likely next week. So we do think that that's a tailwind to, continued strong performance from international stocks. It's something we saw last year, but, it's been an anomaly really for the last decade.
Okay, you mentioned the Fed chair, so we'll talk about that very quickly, too, like Donald Trump appointing what would be his pick for the Fed chair. Is this interesting to you at all?
Oh, totally. I mean, this stuff was in the news. It was up and down. The betting markets were all over the place. I mean, broadly speaking, Kevin Warsh is very well known to the market. He was on the Fed board, I believe, in 2006, and certainly instrumental in some of the deal making that occurred, in the global financial crisis. So it's a lot of crisis management skills, which, hopefully won't, come to bear, but it's a nice thing to have, in your toolkit. But broadly speaking, his views on monetary policy up until very recently have skewed in the more hawkish direction, more concerned, than the average Fed member around inflation, and also more hawkish on the use of the balance sheet. And so, recent comments notwithstanding that have been in sort of the opposite direction, we're going to be watching to see, what kind of Kevin Warsh we see if he does make it into chairmanship of the Fed, and then what that looks like in terms of being able to influence the committee. Obviously, it's a consensus-driven organization, and so we do think that's important to see what that looks like, and we're keeping an open mind at this point.
Okay, so let's move on and talk about earnings. I know you're saying it might be too early to have a full read on earnings season, but we're getting a lot of reports out this week, including today. Is there anything in particular, any company that's jumping out to you, anything you're watching for?
I think this week actually is some interesting, developments. I mean, we had Microsoft report was pretty strong numbers, big increase in capex. The market did not like that. It's basically telling companies, look, if you're going to continue to invest in AI, we need to start to see it in the numbers. We need to see it in margins. We need to see it in revenue growth. I would contrast that with Meta, which had the same type of upside surprise, in terms of capex investment, but they also saw revenue gains and increases there. So the market quite like that. So we do think we're in this stage where we were in a just buy it all kind of environment, more of like a beta trade, and now we think we're in a much more of a stock pickers market in terms of who's investing in AI and using AI to drive efficiency and future revenue and keep margins elevated at a time where labor costs are higher than they have been, except for in 2022 at any point over the last 10 years.
Okay, so much to talk about, but we'll leave it there. Thanks so much for your time, and thanks for weighing in on the TSX as well. We appreciate that.